Happy New Year, guys. This is officially our first weekly setup for the year 2026. I hope it's been a great start for you guys. So in this video, we're starting with the gold charts on the 1 hour time frame. So we're talking about gold, silver, crude oil, GBP-JPY, EUR-JPY, and CHF-JPY. So starting with the gold chart on the 1 hour time frame, we can see that gold has been slowly grinding towards the upside, creating higher highs and higher lows, and we seem to be consolidating around this area of value, right? So we've had a series of bounces around this area of support, right? We had a week down, week up, candle closed above, and now we seem to be trading around this range. So we have a clear area of resistance here around this double top, and we have a base, right? So right now, to go long, the best conservative confirmation to go long would be waiting for a price movement into this area of resistance, consolidating a little so we can have a clear risk to reward ratio, right? Then we go long after the breakout. If this happens, you want to go long immediately after the breakout of this area of resistance. Stop loss can be placed underneath the consolidation list of the breakout. So another confirmation why I'm watching out for this area of value is because if we pull up the moving averages on this time frame, 1 hour time frame, so 200 EMA, 200 SMA, you'll notice that we have these moving averages aligning with this area of resistance, so this double top. So if we do get this consolidation followed by a breakout, so taking out the area of resistance, also closing above the moving averages, then that would be a very good opportunity to go long, because we would have climbed the moving average, right, which signifies a potential opportunity to go higher. So this is the conservative approach for a bullish case scenario, right? So for a bearish case scenario right now, I don't want to even consider going short because this is still a very strong bullish trend, right? But to go short, or to start considering going short, I'm going to go down to the 4 hours time frame and pull up the moving averages on this time frame, right? So in 4 hours time frame, you can see we've been holding this moving average as a good area of support over the last few months, right? So you can see over here, good bounce, good bounce, good bounce. Though we closed a few candles below, but sustained. Right now, to go short would mean waiting for price to come into this moving average, right, which coincides with this area value trend line, consolidate a little and give us a proper break to the downside. Then we can start talking about a huge reversal on gold and a possibility of price reversing this massive trend we've had over the past 1 to 2 years, right? So for now, we're going to stick with a bullish case scenario, and the second bullish case scenario would be watching out for a move into this area of value. So right now, I don't want to trade a bounce of this area of value because it's not clear yet. So I would only consider going long if we take out this area of resistance, right? So that's our first conservative case scenario. Second one, on the 4 hours time frame, if we get a break below this area of support coming into this area of value, which also coincides with our moving averages on the 4 hours time frame, and we get a bounce, then I'm going to look for an opportunity to go long, right, in continuation of the trend. So that would mean entering after a bounce, confirmation of the bounce, and stop loss will be placed underneath the bounce, right? The moving average, the area of value, as case may be, and trading my position will place my first take profit target around these highs, second one around these highs, right? And the third one will just hold the rest of our positions to go as we climb higher, right? If we do climb higher. So this is going to be my aggressive approach, right? So I'm going to go aggressive if we get a breakout into these 4 hours time frame moving averages and we get a clear confirmation of our bouncing. That'll give me an opportunity to go long aggressively inside this area of value, which coincides with our moving averages, aiming for higher price target, right? I would only consider going short when or only if we take out this area of value, take out this trend line, and also take out the moving averages on the 4 hours time frame. Other than that, I'm going to stick with my bullish thesis and wait for the perfect opportunities to go long, which would be first, conservative approach, going long at the break of this area of resistance. Second one, more aggressive approach will be waiting to see if price gets into this area of value and look for opportunities to go long. That's briefly for gold. If you have questions, leave them in the comment section down below. And next, we'll be talking about silver. So silver, similar structure to what we have on the gold, but this one has been very, very solid, right? So we just bounced off of the moving average on the 1 hour time frame, right? So I jumped into this one here at current price level before the market closed on Friday. So I'm currently in on silver and I have my stop loss underneath, the moving averages, right? So we just had a bounce, closed with a doji or a spanning top, right? Yeah, this is a dragonfly doji, right? So the reversal candlestick, good volume pump, bullish engulfing candle on this green candle. So I went long at the close of Friday, so hoping to catch a quick move probably into this area of resistance, maybe 500 pips at the case maybe. If this happens, then I want to, catch this move all the way to these highs, and my stop loss is placed underneath this candle, reversal candlestick, right? This is a very risky trade in my opinion, but I'm using very tight risk management. Another confluence we have is this price retests the breakout from these highs, right? If you're looking at the RSI, so this also plays into my confluences that gave me a confirmation to go long, right? So that's it briefly for SIVA, right? Based off of my position. But if you're not currently in on SIVA, I would suggest you wait for a move breaking above this trend line and taking out this area of resistance, so something like this. So if this happens, this should be your cue to go long on SIVA, right? So just to make this clearer, so if you're not in on SIVA, my thesis will be waiting for price to take out this area of resistance. So if we get a good bounce off of these current moving averages, as I expect, we move into this area of resistance, consolidate a little and get a breakout, then you can go long after the break of these highs like this. Stop loss should be placed underneath the consolidation list of breakout. First take profit target can be as high as this one, second one can be as high as this price levels, right? So this is how I'm going to trade SIVA for anyone who isn't in yet. The reason why I speak about this is because there's a good chance I get blown out, right? I told you I'm currently in on this trade, but there's a good chance price blows me out by coming all the way down into this area of support again before getting that bounce to the upside, which may give us this consolidation and then continuation. So the reason why we're waiting for a break of these highs is because this will confirm a bullish continuation structure, right? So over here we have higher highs, higher lows, higher highs and higher lows, but right now we seem to be creating lower highs and a base which seems like a descending triangle, right? So it means bears are mounting pressure towards the area of resistance, area of support, and our moving average is there to catch the price, holding the price strong. So if we lose the moving average and also lose this area of support, then we may see price decline. But if we get a bounce up to into this area of resistance and we take out this area of resistance, then this would be a good confirmation to go long in continuation of the trend, because this would have signified a bullish market structure continuation, right? So that's it briefly for SIVA. And to go short, talking about the short case scenario, that will mean, excuse me, I'm going to get rid of this. So short case scenario will mean waiting to see price take out this area of support, right, like this, and a move to the downside. So if this happens, then I am personally going to consider going short, right, around this breakout, good volume breakout. Then stop loss will be placed above the consolidation list of the breakout, very tight risk reward ratio, and my take profit target could be as low as these price levels, right? So this is how I'm going to trade SIVA going short, right? So the only reason why I'm going short in the opposite direction of the trend is because we have lower highs, right? So lower highs means bearish pressure mounting towards downside, and if we lose this area of support, lose the moving average, that means there's a good chance we see some sort of reversal to the downside, and the market decides if the trend is going to continue or if this will be the end of the trend for SIVA, right? So this is it briefly for SIVA. Moving on, I'm talking about crude oil. So crude oil, we haven't discussed about this in a while, but we seem to be in a clear downtrend. So this is a 1 hour time frame. So you can see lower highs, lower lows. Right now we seem to have broken the structure, creating a lower low, and I do believe we may see an extended price decline this week, right, coming down like this into this area of support. If this happens, then you want to be on this trade if crude oil is something you trade, right? So this is my brief outlook for crude oil, right? So for me, I am going to wait for a consolidation, so more consolidation over here, right, followed by a good breakout to the downside, right? So if this happens, you want to go short after the breakout of the structure. Stop loss can place above this consolidation, and then you can place your TP around these lows, right? So this is briefly for crude oil, right? So nothing much to see here, because this one is a bit difficult to trade, right, because of the irregular movement you can get from crude oil sometimes. So you can see over here, if you had taken this price levels, right, so if you cut the breakout, then you'd have cut a very decent move, but you can see the movement back up, consolidation, back down, consolidation, back down. So you should be careful trading this, right? But if you feel like this is too complicated to trade, you could just skip it. But I would be taking this one, right? Because I think the bearish trend is going to continue. And that's what I'll be watching out for to go short on crude oil. If you have questions or this is not clear enough, use the comment section down below. And secondly, another reason why I'm going in for this is because on the 1 hour time frame, you can see we've just broken through and retested the moving averages on the one hour time frame. And on the 6 hours time frame, we've been using this moving average as a very solid area of resistance. So over here, you can see the bounce over here. You can see the bounce over here, and you can see we got close and got rejected again. So that's why I think there's enough bearish pressure mounting towards the downside that could eventually see the price of crude oil going all the way down to this area of support, or probably even lower, right? So that's it briefly for crude oil. Moving on, we're talking about GBP-JPY. So GBP-JPY, EUR-JPY CHF-JPY, they all look similar, like the same chart, but we have higher highs, higher lows, sweet bullish market structure, right? So what I'm watching out for right now is a breakout from this area of resistance, and this should be a straightforward trade in my opinion. So we have a bullish flag at the moment. So the only way we go long on GBP-JPY is if we take out this area of resistance. So something like this, right? So we move into the area of resistance, we get a good breakout and maybe retest if you want to be more conservative. But I usually don't wait for a retest, right? I go straight in because I'm an aggressive trader, right? And I trade with good risk management. So if this breaks out, first case scenario will be going straight in after the breakout. Stop loss will be placed underneath the consolidation list of the breakout, or under this lows, right, which is this current movement over here, right? And I'm going to trade my positions as we go higher, right, because I think there's going to be a price discovery. So let's go to the daily time frame to see clearly. Yeah, so right on the daily time frame all the way back to 2021, we have no highs, right? So we have no highs to measure where, okay, we have something here. So we have one here, so we have one over here, and we have another one over here. So going back to the 1 hour time frame, yes, so this is the first high. So this could be our first take profit target if we do get a good breakout from this area of resistance, because daily time frames can be very wide. So this is the other highs, right? So potential take profit target. But at the moment, we're just going to aim for this one, ride the trade as we go higher, because if we clear this area of resistance, then I don't see anything stopping us from going all the way to these highs, right? So this is briefly for GBP-JPY, clean bullish flag. There's a good chance we take out area of resistance and we climb higher, aiming for these price levels over here. So moving on, we're talking about EUR-JPY, similar to what we have on GBP-JPY, right? Bullish market structure, higher highs, higher lows. And all we have to do now is take out this area of resistance and we go long, right? So something like this, we get a move into this area of resistance, consolidate, and then get a bullish breakout to the upside, right? And this would be our confirmation to go long. So entry after the breakout, stop loss can be placed underneath the consolidation list of the breakout, and we trail our positions to go higher. So you can go to the higher time frames to see possible areas where we could get to before we see massive reversals, right? Lastly, we're talking about CHF-JPY, also similar. So all JPY pairs right now looks alike, right? Bullish market structure, clear area of consolidation, it will be bullish flag, rectangle, whichever pattern suits the description, right? But the most important thing is the breakout that occurs after the consolidation. So for this one, we're waiting for a move into this area of resistance, consolidation, so CHF-JPY, right? And then a proper breakout. So if this happens, same thing, same principle, we want to go long here, stop loss underneath this area of consolidation, and we trail our positions to go higher. So the reason why I'm not talking about USD-JPY is because USD-JPY is largely affected by the US dollar, and it doesn't give us a clean chart as these other JPY pairs does, right? So something else to also take note of is if you pull up the moving average on the 1 hour time frame, you can see we have a bounce here. So this is CHF-JPY moving averages on the 1 hour time frame, right? You can see we have good bounces off of this area of support, which coincides with the moving average here, which means there's a good chance to go higher. EUR-JPY, same thing. So if you pull up the moving averages to 1 hour time frame, you can see bounce up the moving average on the area of support as well, which means there's a good chance we go higher. GBP-JPY, the same thing, pull up the moving average on the 1 hour time frame. You can see, excuse me, yeah, so you can see good area of support over here, nice bounce, and we're likely to go higher. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade these chart patterns, get the chart pattern playbook. It's totally free, and I have the link attached in the description below. That's it from me, guys, this week. Happy New Year once again. Wish you a peaceful year ahead. See you next week.